biggest drag as investors worried about demand for technology supporting AI as they waited for results from market heavyweight Nvidia. Will this have a knock-on effect on Indian equity market today? We will find out on the show. And Indian equity markets continue to bleed yesterday as the Sensex was down 1% in trade, wiping out 5 lakh crore rupees of investor wealth across all BSE listed stocks. But India is not technically in a bear market yet, say experts. Then what exactly is this sell-off? We will tell you on the show. IT stocks TCS, Wipro, HCL Tech and Infosys take a massive beating on worries of US inflation being sticky as this weighs in on the unlikelihood of US Fed cutting rates anytime soon. A negative for Indian IT companies as the cost of capital in US stays high. Lesser business likely to come for Indian IT companies with US clients. And staying with the IT sector, Infosys Mysuru campus delays the assessment of 1,000 trainees onboarded in October. Yet again, remember, National IT Employees Senate had raised the issue of unethical layoffs of 350 Infi trainees with the Labour Ministry. And as markets continue to tank, gold gets dearer by as much as 350 rupees per 10 grams in the national capital. The precious yellow metal flirts with all-time high levels of around 89,100 per 10 grams of 24-karat gold. But experts tell News9 this may not be the time to accumulate gold. India and the United Kingdom to grow trade by 2 to 3 times in the next 10 years, says Industry Minister Piyush Goyal as India-UK trade talks continue. How far are the two nations from signing the much-awaited free trade agreement? We discuss on the show. RBI has allowed depositors of New India Cooperative Bank to withdraw up to 25,000 rupees from the 27th of February. Remember, the bank was under moratorium by the central bank amid irregularities that resulted in the former CEO's arrest over a 122 crore rupee fraud. Mahindra & Mahindra launches the Scorpio N Carbon Edition in metallic black at a price starting 19.19 lakh rupees with 7-seat trims, going up to over 24.89 lakh rupees. And as India gears up to infuse a healthy mix of clean energy towards achieving net zero carbon emissions by 2070, News9 gets you an exclusive report on how far we are from nuclear energy reactors beginning to fire on all cylinders. Let's start with the top story we're tracking this morning. India and UK have resumed talks on a comprehensive trade deal aiming to more than double bilateral trade in the next decade. Commerce Minister Piyush Goyal and UK Business Secretary Jonathan Reynolds made the announcement in New Delhi yesterday. The discussions come amid global economic uncertainties, including tariff threats from US President Donald Trump. Now, despite challenges, both nations are pushing towards what they call a path-breaking free trade agreement and an investment treaty. But there is no deadline yet on when this FTA will finally come through. Piyush Goyal expressed confidence that the deal could boost merchandise trade towards the two countries and between the two countries by up to 2 to 3 times over the next 10 years. Now, bilateral trade in goods and services between India and the UK currently stands at about $41 billion. Remember, talks had been paused since March 2023 but gained fresh momentum after discussions between Prime Minister Narendra Modi and UK Prime Minister Keir Starmer at the G20 summit in Rio de Janeiro last year. Now, just to give some context on these new renewed talks between India and UK to advance free trade negotiations. Now, the countries are trying to eliminate and reduce customs on maximum goods. The FTA to ease norms to promote trade and investments is under discussion. UK-India FTA negotiations started way back in 2022 in the month of Jan. It's been almost 3 years and we haven't yet been able to even set a deadline. The UK is India's sixth largest investor in India, but UK happens to be India's 11th largest trading partner. The UK has invested just about $35 billion through FDI in India in the last 25 years or so. Now, as far as bilateral trade between the two countries is concerned, the bilateral trade for the financial year 2022-23 stood at about $20.3 billion, which grew just slightly to about $21.3 billion last year. Now, joining me on the show to discuss how near or how far we are from the FTA and what exactly is a free trade agreement is Barnik Chitran Mehta, Managing Partner, Chrysalis Equity Ventures. Barnik, good morning. Thank you for being here with us on News9. First up, just explain to us how exactly is a free trade agreement different from any other trade agreement?
No, a free trade agreement by its definition is an agreement which promotes more seamless, I would say, transit of goods and services between two countries. What typically happens in a free trade agreement is that preferential tariffs or different kinds of import duties are levied versus the standard import duties. So typically within a free trade ambit, a lot of goods which are part of the import-export norm between two countries are actually taxed at different rates between these two countries than it would be taxed otherwise. So if you take the example of India, right, a free trade agreement for India with the UK would mean that there would be lower tariffs or import duties on goods UK wants to sell to India, and vice versa for whatever goods and services India wants to sell to the UK, there would be a far more preferential tariff norm. Now, the agreement not only covers tariffs, but it would cover other elements, usually like regulation, social security, labor movement norms, and also things which is a stickler for the India-UK deal, a legal recourse and arbitration. So a free trade agreement, while seeking to boost trade between two countries, covers not only preferential tariffs, but a host of other issues, including legal matters and labor and human capital matters.
Okay, so let's talk about tariffs for a while. And tariff, as Donald Trump himself has said, is his fourth favorite word. And right now we can't really live in an environment without discussing trade in the context of what we are seeing coming by way of the US and its President Donald Trump. Now, is it not obviously in the interest of the entire world to go ahead and stitch up more FTAs given the tariff threats that the US is threatening the entire world with?
Yeah, I think that's correct. If you look at India, right, we just discussed that UK is the 11th largest trading partner, whereas the US, for example, is the top 3 trading partner, right? Just in terms of numbers, our annual trade figures with the US are at north of $150 billion. Versus with the UK, it's somewhere between 30, 40, 50 billion, depending on what you count, right?
Right.
Now, if you look at the sizes of the two economies, India is the 5th largest economy, the UK is the 6th largest economy. The UK does not manufacture and produce a lot of goods and services, and India also needs a lot of higher value-added manufacturing products and services. So there's a much natural fit between the two countries to do far more trade. So if you look at just the numbers, I think we can easily do 2 to 3 times of the number we are doing today. And why in a decade? I think this can be easily achieved within 5 years, right? If we get some of the issues sorted, which are not just on the tariff rates, but also some subtler issues on visa, rules of origination and arbitration.
So let's just spend a minute talking about the other FTAs that India has been able to crystallize. And in fact, Ursula von der Leyen is expected to be in India later this week and has a meeting scheduled with Prime Minister Modi. So if you talk about India and the European Union, there is a free trade agreement of about $100 billion in the making by 2030, if I remember correctly. If you talk about India and Switzerland, we are looking at by 2035 having our trade volume go up to about $150 billion. But UK still continues to be, it might be the 11th largest trading partner, but the volume still seems to be fairly small, Barnik. So do we really need trade with UK to grow up? Is that on India's main priority bucket, or is India's real concern with the delay in the UK issuing visas to Indians?
So if you look at the Indian point of view, they've actually bucketed these ideas together, right? I think from the UK point of view, I think doing more trade with India is important for them, particularly now that they're out of the European Union construct, right? I think that means that they need to have free trade agreements with other European Union partners. So I think the imperative on UK to do the trade agreements is far higher, because they, as you have flashed on screen, they are demanding lower tariffs on several products like whiskey, scotch, automotive components, aerospace components, lamps, chocolates, and confectionery, which I think are taxed quite exorbitantly. And for them, that's an important factor, because it gives a fillip to the UK. If you look at the UK as an economy, right, this is not an economy which is growing robustly, or does not have the same growth profile as a US and UK growth profile. There is a lot of idle manufacturing and service capacity which needs to be utilized globally, right? For the UK, hence, exporting more of its goods, and including services. In fact, there is a demand from the UK to actually create more level playing field when it comes to other areas like banking services, legal services, as well as services in telecom and technology, which just ensures that they have far more greater demand to supply to. In fact, one of the sticking points is UK is also requesting for an access to bid for government procurement projects, right? So this is one of the requests. So if you look at the UK point of view, I think India needs, they need India a lot. Even from India's point of view, we have set an export target of $1 trillion, right? If you have to get to an export target of $1 trillion, right, you have to double or triple your trade or exports with several trading partners like the UK, right? But from India's point of view, any trade deal also means simpler visa norms for not only IT workers, but also healthcare workers. Healthcare workers are a big export India does to the UK. There's also a request for social security protection for workers who are going under intercompany norms. So again, if you look at what the objectives are, I think the UK is far more interested in exporting services and goods to India. India is far more interested on visa, also very interested in expanding FDI investment from UK into India, while from 2020 they've done $30 billion. But if you look at the last 12 to 18 months, the net FDI may be negative. So I think both parties have different motives, right? Which is why this free trade agreement will be an FTA++ if it gets signed, addressing some of the concerns both on the India side but also as well as on the UK side.
But Manik, talking about visas, do you think it really is something that the UK should consider a little more seriously, given that it is not among the fastest growing economies by any measure of calculation, and hence it would need more people to come into the country and work? And now that they have the Labour Party in power in the UK, what is really holding UK back by a quicker and a more agile way of addressing the visa issue with India?
So immigration and visa have become hot topic issues in Europe, right? In general, if you look at the rightward shift in Europe, and UK actually bucked the trend in appointing a left government, right? I think in general, immigration has lost popular appeal amongst the masses, right? So having immigration which is liberal, like it was 8-10 years back, is hard to prove. Even in the current environment, if you look at the backlash the Labour government has faced with a lot of internal scams and I would say some of the law and order issues associated with immigrants, I find it hard to believe that there will be a complete U-turn on the limited immigration policy. I think one of the things UK has is actually a fairly straightforward and transparent visa system. They have implemented points and they're very clear what kind of workers they actually need, right? I think the discussion there is to just ensure that instead of giving the house away on visas, which is unlikely, right, which they will do, I think the UK may accede to coming up with some norms to ease some of the stringent requirement. But I don't see a scenario in which, even though it's a Labour government, that they're going to go back all the way to what the visa norms were. So I think the visa is a little bit of a wish list. I think there will be some informal assurances given. But if you look at from India's point of view, one of the biggest challenges beyond visa, which I think is a win they would like to take, is if you look at textile and apparel, which is the first category of exports we give. UK has a very stringent carbon tax and also stringent sustainability norms, which makes our apparel quite uncompetitive, right? I think in an ideal scenario, I don't see an explicit deal on visas, but maybe the UK will give way on sustainability and carbon tax on textiles in return for lower tariffs on goods. But I think the visa is an ongoing discussion, and I think it's there on the table. I don't expect it to get resolved as part of the FDA deal. So I do expect a little bit more laxity than what was administered in the previous Conservative government.
All right, and one final question. I'm not sure if you'll have an estimate of an answer for that or not, but if a guesstimate was to be made, Barnik, there's no deadline set by either government on when this FTA will come through. This is the 15th meeting in about 3 years that is being held on FTA between the two sides. How far are we from the FTA actually coming through?
So listen, the folly of the 2022 negotiations was the Diwali deadline, right? I think as people have pointed out, I think the deadline itself was one of the reasons why the talks collapsed, right? While I wouldn't bet money on a deadline, given the fact that the European Union is also coming to, if need be, to renegotiate its FTA, right? And given the unreasonable asks the US counterparts may have, right, from an Indian point of view on whatever free trade deal they sign with the US, the environment today is very different from 2022. I don't think there's any impending elections on both countries.
Right.
I think India has a higher imperative to sign the trade deal because bilateral investments from the UK are actually held up in the absence of certain concessions on arbitration.
Right.
I would be I'm cautiously optimistic for a deal before end of the year, right? Given all the geopolitics, right? Bar all the geopolitics, I would just view it as yet another news. But given everything that's going on around us, I think there's increased urgency on both sides to get a deal done, given particularly what's happening in the geopolitics between US and increasingly what may happen with China going forward.
All right, Barnik, let's leave it at that. Barnik, they're cautiously optimistic that by end of the year, we may have a UK-India free trade agreement. Let's leave it at that for now. Barnik, thank you so much for joining us this morning. Time for a quick break. The markets have opened flat, albeit a little bit in the green. We'll bring you the mood check on the other side of this break.
झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
मैं और आप, हम अलग कहाँ हैं?
Gill on 199।
अपनी अपनी मंजिल पर हम दोनों की नजर है और उसके लिए हम जी जान लगाकर मेहनत करते हैं, पर कभी कभी
He's out on 199।
मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
What does it take to be the greatest in the world? Speed, talent, commitment, but there is one thing which truly sets you apart. Your inner strength. Sonjiri DMT Reebok, true inner strength.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Welcome back. You're watching Morning Brief at 9. The Indian stock markets have just opened a few minutes back. Let's bring you the mood check. It's been a flat open for the markets. You will see a little more green color on your screens today, but don't confuse yourselves. This comes on the back of the Sensex losing a full 1 percentage point on the markets yesterday. Sensex was down about 800 points or so in trade on Monday. So the slight recovery that you're seeing, and one would pretty much call it flat with a second decimal point recovery in the green, it wouldn't really be construed as a recovery. But yeah, no further blood loss on the markets, at least in early trade this morning. Significant high coming in on the small cap 100 space, which is up about 0.3% today. But remember, even this was an index which had taken a massive beating yesterday. Markets are a little less volatile this Tuesday morning, staying at about 14.3 levels on the India Wix. Let's pull up the Nifty 50 heat map and see which are the sectors in action today. Well, unlike yesterday, the screen is dotted with a little bit of red and a little bit of green. It's not completely red, but one sector which does stand out is the IT sector. TCS is down about 0.9% again this morning. Remember, TCS was down about 3.5% yesterday. But IT sector stocks, barring Infosys, continuing to lose. This seems to be a knock-on effect by way of the US Nasdaq, the tech-heavy Nasdaq, slipping about a 1% point yesterday. Also bad news coming with expectations of US inflation likely to be sticky between 2.6 to 2.8%, and that data is expected to come out on Friday. This would mean that lesser likelihood of the US Fed cutting rates, and hence the cost of capital for US companies likely to remain high. And if that remains high, it becomes a more prominent chance that business coming by way of IT companies in India could be lagging, and that continues to be bad news for the IT sector. If you look at Mahindra and Mahindra today, this stock is up about 1.6%. Remember, Mahindra was one of the exceptions which was in the green yesterday, and the recovery in Mahindra stocks also coming primarily by way of more than a double-digit correction that came by way of its stock when announcement of Tesla driving into India was making news, where Mahindra & Mahindra, one of the largest EV makers in India, in addition to Tata Motors, was under competitive threat from Tesla coming in. Reliance is a positive change today. Reliance is up about 0.2%. This was another Nifty heavyweight which was dragging markets yesterday. So that's the mood on the Nifty 50 heat map. Take a look at it. Some sectors in the red, but mostly it seems to be a green open for the markets today. Now, despite the Sensex being down about a percentage yesterday, and overall the Sensex and the Nifty 50 both correcting as high as almost 14% from their yearly high of 27 September, markets have corrected, but it doesn't still seem to be a bear market exactly. So today we try to explain to you on the show what exactly is a bear market and why are analysts and experts not calling it a bear market just as yet. To put very simply, a bear market is a telltale sign which helps you identify which side the market is likely to go from here. So it's a downward trend in the financial markets, but this downward trend must continue for a couple of quarters before you can call it a bear market. Now, with the weakening of India's economy, or rather the confidence of investors sort of losing steam with the Indian economy not growing as fast as it was expected to grow, the bear market sort of assumption comes into place. Remember, India's GDP slowdown has been at play for at least the last 2 quarters or so. Now, a bear market is typically when markets decline by more than 20%. So far, we've seen the Indian markets from its recent highs of 27 September decline just by about 14% or so. We can't really call it a bear market until the decline comes to more than 20%. And that's the reverse of a bull market. And a bull market is when stocks go higher than 20% or so. Now, this situation should prevail for about 60 days or so for it to be called a bear market. Let's bring you some data and tell you how the Indian markets have fared this year. Year to date, I'm talking about calendar year 2025 from the 1st of Jan. The Sensex has dipped about 5.16%. That's a 4,000 point hit on the Sensex 30. The Nifty 50 is in similar lines. It's lost about 2,000 points, or about 5% of wealth has been eroded on the Nifty 50 index. Now, is India really heading into a bear market? That is something that we really want to try and understand going forward. Well, the Indian market from its September highs, like I told you, has seen a correction upwards of 13%. The Sensex from the 27 September high has lost as much as 11,380 odd points, which is a slide of about 13.2%. The Nifty, on the other hand, has fallen even sharper than the Sensex, down about 14%, lost about 3,660 points from its all-time high. Now, there are some obvious reasons that we know why the markets are seeing this downturn of a bull market and a little more than a correction, as experts are calling it. Now, number one, of course, is the concerns over the widespread trade wars likely to erupt across the world over tariffs, and these tariffs are coming from the US. There are concerns over reciprocal tariffs by the US, not just on India, but also on China. And that is something which is keeping investors on the edge. And what are these investors doing? These investors, called FPIs or foreign portfolio investors, are exiting emerging markets, including India. And there has been the sell-off spree that we are seeing in FPIs, which started in October. Now, there is, of course, a healthy Chinese stock market headwind also for India, which means that if investors are choosing to invest in an emerging market, then they are preferring to invest in China over India, which again becomes a problem for us. Now, there is, of course, the domestic factor of a slight slowdown in the Indian economy, not exactly a slowdown, but a reduced rate of growth for the Indian economy, and that is also worrying investors who are sitting on the fence. And then, of course, there is this fading expectation of US Fed cutting rates anytime soon. Remember, the data for US inflation is expected on Friday, and there seems to be an understanding that US inflation is continuing to be sticky, and that may not result in any rate cut by the US Fed. All right, but as the Indian stock markets continue to bleed, there is something that is shining brighter than ever before. I'm talking about the yellow metal gold. Gold prices are once again surging, nearing record highs in the national capital. On Monday, the precious metal climbed as high as another 350 rupees to trade at, guess what, 89,100 rupees per 10 grams of 24 karat gold. Now, this comes after gold of 99.9% purity had closed at about 88,750 levels on Friday. Now, according to analysts, the rally is expected to continue as global uncertainties push investors towards safe haven assets, and gold, of course, happens to be the favorite of safe haven asset investments. Central banks across the world are also increasing gold reserves to hedge against economic volatility and policy shifts, again, all emerging from the US. Meanwhile, US gold prices are hovering near record highs, mainly by concerns over Donald Trump's tariff plans, which could stoke inflation and intensify global trade tensions. Trump reaffirmed on Monday that tariffs on Canadian and Mexican imports remain on track for the March 4th deadline that he had set, despite diplomatic efforts to address trade concerns. And there's some relief for depositors of New India Cooperative Bank, as the Reserve Bank of India yesterday allowed them to withdraw up to 25,000 rupees from their accounts starting the 27th of February. Now, this is almost 50% of the depositors would be able to withdraw their entire kitty from the cooperative bank, because 50% of them have deposits under 25,000 rupees. The decision of the central bank comes just over a week after it dissolved the bank's board, citing supervisory concerns. In a statement, the RBI said that with this move, more than 50% of depositors will be able to withdraw their full balance, while others can access up to 25,000 rupees from their accounts. Withdrawals will be allowed through bank branches and ATMs, but the total amount will be capped at 25,000 rupees per depositor on their available balance, whichever is lower. And moving on to a News9 exclusive now, given the pace at which the Indian economy is growing, India's energy demands are expected to rise faster than any other country in the world over the next decade or so. Remember, at COP26, India pledged to cut down its carbon emissions and achieve net zero carbon emissions by 2070. Now, the move from coal-based thermal power to greener and cleaner forms of energy is expected to be a Herculean mandate for the government, any government that continues to be in power or comes to power until 2070. And this purely comes given the high volume of energy demand in India. Now, apart from renewable sources, nuclear energy is something that India and US are now expected to work even closer together on. Now, even as the technology transfer for nuclear energy from the US to India has been stuck for decades, Prime Minister Modi's recent US visit seems to have added some momentum to at least the coming of what is called the small modular reactor technologies in India. Our colleague Amit Ranjan was at Elecrama 2025 and he caught up with power generation and transmission leaders to bring you this exclusive report on where India is headed in its green energy transition, especially with nuclear energy. Listen in.
Elecrama 2025 is about providing insights into energy optimization in the time of constantly groundbreaking advancements in digital tech, be it in the form of AI, quantum, data centers, or even blockchain that consume electricity in magnitudes unheard of in the past. This event is about meeting that magnitude of electricity demand in the times to come while making it green at the same time.
There are many experiments going on to ensure that you are able to get to that level. But I think until the battery storage system and things like pumped hydro and solutions like those don't pick up scale, economic scale, I don't think you'll get to round-the-clock renewable power.
SMR is a very new concept, small modular reactors, and they have been under discussion for the last 5 to 6 years or so. Now I think with the recent focus, emphasis, some treaties being signed, India will get access to more of these SMR technologies. By and large, we will have to balance our carbon footprint as we grow. So SMRs will play a role there because their carbon footprint is very low.
We are going to have huge number of rooftop solar thanks to the government's schemes, and this is going to bring in a new change which was not there earlier.
We also have several technologies in our plate. Low carbon, we have hydro, we have nuclear, gas is better than coal, and we do have as well all the opportunity from photovoltaic and wind. So I believe that there will be this portfolio of technologies that India will be leveraging to meet the target.
All right, and before we head into a break, a quick look at global headlines making news today. US President Donald Trump says tariffs on Canadian and Mexican goods will proceed as scheduled, reiterates US has been mistreated. Ukraine marks 3 years of war with Russia as European leaders attend summit, US officials absent. US President Donald Trump and French President Emmanuel Macron reaffirm commitment to ending Ukraine war but acknowledge key differences on strategy. Donald Trump shifts US approach to Russia-Ukraine war as Moscow welcomes talks, NATO membership for Kyiv in doubt. Tech stocks drag Nasdaq lower as investors worry about AI demand ahead of Nvidia earnings, while inflation and economic concerns add pressure. iPhone maker Apple to invest $500 billion in US over 4 years, build AI server factory in Texas and create 20,000 R&D jobs. Starbucks to cut more than 1,000 corporate jobs as CEO Brian Niccol announces turnaround plan amid declining sales and business restructuring efforts. Alibaba to invest $52.4 billion in cloud and AI infrastructure over 3 years, solidifying its lead in China's AI race. And Dutch technology investor Prosus moves to acquire Just Eat Takeaway in a $4.3 billion deal aiming to create a European food delivery giant with global influence. All these stories and more on the other side. You're watching Morning Brief at 9.
और आप एक जैसे ही तो हैं। एक बार मंजिल दिख जाए
One shot of a century.
तो उसे पाने के लिए हम अपने कदमों को नहीं रोकते।
That looks out.
पर कभी कभी मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
In the chaos of battle, one weapon stands as a silent reaper of the battlefield. It can kill at ranges of over 3 kilometers. Just one precise shot can shatter enemy lines, disrupt entire formations, and tip the scales of war. This is a weapon born in Bharat, and it's crafted to take on the best in the world. This is the SSS Defense Sabre, and you're watching Guns of India.
This and more, streaming on News9 Plus. Download now.
Welcome back. You're watching Morning Brief at 9. A look at all the global stories in news this morning. US President Donald Trump doubled down on his stance regarding tariffs on Canadian and Mexican goods. When asked about the looming deadline for a pause, Trump made it clear that the tariffs would proceed as scheduled. He reiterated his long-standing claim that the US had been mistreated by its neighbors and allies. Moreover, he went on to criticize past trade agreements, arguing that those who allowed such deals should be ashamed. Trump emphasized that the tariffs were moving along very rapidly and would be implemented on time, on schedule. Listen in.
We're on time with the tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. We were led by, in some cases, fools, because anybody that would sign documents like they signed, where they were able to take advantage of the American people, like has happened over the last long period of time, except for a little 4-year period that took place 4 years ago. But anybody that would agree to allow this to happen to our country should be ashamed of themselves. No, the tariffs are going forward on time, on schedule. This is...
Quelques mots en français.
And I'm not even blaming the other countries that did this. I blame our leadership for allowing it to happen. I mean, you know, who can blame them if they made these great deals with the United States, took advantage of the United States on manufacturing, on just about everything, every aspect that you could imagine they took advantage of. I look at some of these agreements, I'd read them at night, and I'd say, who would ever sign a thing like this? So the tariffs will go forward, yes, and we're going to make up a lot of territory. All we want is reciprocal. We want reciprocity. We want to have the same. So if somebody charges us, we charge them. It's very simple. But
reciprocity in tariffs there, says Donald Trump. Meanwhile, Ukraine marked 3 years of war with Russia on Monday by hosting a summit attended by several European leaders. However, the absence of top US officials sent a strong signal about US President Donald Trump's shifting stance towards Moscow since his return to power. Among those present were European Commission President Ursula von der Leyen, European Council President Antonio Costa, and leaders from Canada, Denmark, Iceland, Finland, among other nations. As Ukraine enters its 4th year of war, uncertainty looms over whether it can still count on its longtime ally, the United States. Take a look.
Putin is trying harder than ever to win the war on the ground. His goal remains Ukraine's capitulation, and we know what could happen next, because it has already happened before. It is not only the destiny of Ukraine that is at stake, it is Europe's destiny that is at stake.
We must do everything in our power to enable Ukraine to secure a just and lasting peace, a peace that cannot be achieved without Ukrainians at the table.
But not a peace at any cost. A peace built on the humiliation of the victim, one that rewards Russia for its aggression, would not be a true peace. It would be a betrayal. We Czechs know all too well what such a betrayal feels like, having experienced it with the 1938 Munich Agreement. Any deal must be negotiated and accepted by Ukraine.
US President Donald Trump and French President Emmanuel Macron reaffirmed their commitment to ending the war in Ukraine during a joint press conference in Washington, D.C. Marking 3 years since Russia's invasion, both leaders stressed the need for a resolution. But Macron made it clear that he and Trump disagreed on some key issues. While Trump expressed a desire for a ceasefire as soon as possible and said he was trying to arrange one between Ukraine and Russia, Macron urged a more deliberate approach, starting with a truce and then a peace deal that includes security guarantees.
Our focus is on achieving a ceasefire as soon as possible and ultimately a permanent peace. My meeting with President Macron today was another important step forward in that sphere because he's been very much involved right from the beginning in trying to get it over with, and we're going to get it done. I believe that Emmanuel agrees with me on many of the most important issues. Chief among them is this is the right time. It may be the only time. We're working on deals right now, transactions right now, and in particular, the big one is to get the war stopped, whether it's ceasefire or direct to an agreement.
I think it's good to have discussion. I think it's useful to have negotiation. I think it's super important to go to the peace. But my strong point was to say, let's try to get something first which can be assessed, checked and verified. And let's be sure that we build sufficient guarantees on the short run. And this is where we are ready to be engaged. As for France, a lot of my European colleagues are ready to be engaged. But we do need this American backup because this is part of the credibility of the security guarantees. And this is our collective deterrence capacity. Thank you.
And staying with the Russia-Ukraine war, meanwhile, Ukraine has marked 3 years since Russia's full-scale invasion. Yesterday on Monday, Deputy Prime Minister Olha revealed that Kyiv and Washington are in the final stages of negotiating a key minerals deal, one that could play a crucial role in ending the war. But does this mean Ukraine is close to securing a peace deal? And if so, what might it look like? This report tells you all.
As Russia's war in Ukraine entered its 4th year on Monday, the Kremlin said it welcomed what it called a new U.S. approach to dialogue with Moscow. U.S. President Donald Trump has flipped the switch on Western efforts to isolate Moscow following the war, as he and his officials engage with their Russian counterparts over plans to end it. Ukraine has said it's committed to a diplomatic resolution to the war. But with Kyiv and Europe shut out of those talks, Washington seems inclined to grant Russia a number of concessions that may be hard for Ukraine to swallow. U.S. Defense Secretary Pete Hegseth has told NATO allies it was unrealistic for Ukraine to join the military alliance if it wants to settle with Russia. Moscow has demanded NATO scrap its 2008 promise to one day give Kyiv membership. It has also dismissed the idea of having NATO member forces act as peacekeepers in Ukraine under a ceasefire deal. In November, Reuters reported that Russian President Vladimir Putin was ready to cut a deal with Trump if Kyiv dropped its goal to join NATO and if Moscow didn't have to make major territorial concessions. How much land Russia can keep is a critical issue moving forward. It now controls nearly 1/5 of Ukraine, or an area about the size of the U.S. state of Ohio, mostly in the east and south. Putin in June last year said he wants Ukraine's troops out of 4 Ukrainian regions claimed and mostly controlled by Russia. The US defense chief in February dismissed Ukrainian hopes of restoring its internationally recognized borders.
Chasing this illusionary goal will only prolong the war and cause more suffering.
For any deal to happen, Ukrainian President Volodymyr Zelensky says Kyiv needs security guarantees to prevent any future Russian attack. But the Trump administration has made clear it will send no troops. That places the burden on European powers, which are likely to struggle without US backing. Britain and France are firming up ideas with allies for military guarantees for Ukraine, according to Western officials. The two leaders will seek to persuade Trump to provide US assurances after any ceasefire deal. Ukraine does have one thing to offer the US, its mineral wealth, including lithium, which is key to making electric vehicle batteries. Zelensky rejected an initial deal to give Washington 50% of Ukraine's critical minerals, saying it offered no security guarantees. But with little leverage on hand, Ukraine is set to sign a minerals deal soon. Reuters also reported that US negotiators had raised the possibility of cutting Ukraine's access to Elon Musk's Starlink satellite internet system, which has played a vital role in Kyiv's military operations. Musk has denied this. On Monday, Zelensky's deputy posted on X saying Ukrainian and US teams are in the final stages of negotiations regarding the minerals agreement, adding that Ukraine hopes to sign the deal in Washington with officials there, quote, to showcase our commitment for decades to come.
Wall Street saw a rough start to the week with the Nasdaq Composite closing down more than 1% on Monday. Big technology stocks led the decline as investors worried about demand for AI tech ahead of Nvidia's highly anticipated earnings report. Meanwhile, concerns over tariffs, inflation and slowing economic growth continue to weigh on the sentiment following a batch of weak economic data and a disappointing forecast from Walmart. Take a look.
Stocks closed mostly lower Monday, with the Dow eking out a slight gain, the S&P 500 dropping 0.5%, and the Nasdaq ending the session down 1.2%. Investors worried about demand for technology supporting artificial intelligence, while they waited for results from market heavyweight Nvidia due out Wednesday. Shares of the chipmaker ended 3% lower. Investor concerns remain over hefty spending on the technology, since low-cost AI models from China's DeepSeek rattled the industry in January. Shares of AI chipmaker Broadcom also fell sharply on Monday, while another popular AI stock, Palantir Technologies, was the tech sector's biggest percentage decliner. Meanwhile, concerns remain about tariffs and inflation, as well as economic growth after last week's batch of weak economic data and a disappointing forecast from Walmart. FM Investments Senior Portfolio Manager Don Nesbitt has one word to sum it all up.
I think the underlying theme is uncertainty, right? We've got uncertainty out of Washington. We have uncertainty about the state of the consumer, and the market's been trading at very high valuation. So when you got this combination of high valuation and uncertainty, investors get a little bit skittish. So you've seen that kind of the pullbacks here.
Other stocks on the move included Warren Buffett's Berkshire Hathaway, which rose 4% and hit an all-time high during the trading session after posting its highest ever quarterly profit, driven by improvement in insurance operations. And shares of Nike climbed 5% after Jefferies raised its rating for the stock to buy from hold.
And staying with corporate America, iPhone maker Apple is making a massive investment in the US economy as the tech giant announced that it will spend as much as $500 billion over the next 4 years, including plans for a huge AI server factory in Texas. The investment will also create around 20,000 research and development jobs across the country. Take a look.
Apple said on Monday it would spend $500 billion in U.S. investments in the next 4 years. The money will fund a giant factory in Texas for artificial intelligence servers and 20,000 research and development jobs across the country in that time. It is also expected to cover spending on everything from purchases from U.S. suppliers to filming of television shows and movies for its Apple TV Plus service. Apple declined to say how much of the figure it was already planning to spend in the country. The move comes after media reports that Apple CEO Tim Cook met President Donald Trump last week. Many of Apple's products that are assembled in China could face 10% tariffs imposed by Trump earlier this month. though the iPhone maker had secured some waivers from China tariffs in the first Trump administration. One analyst tells Reuters this is a political gesture toward the Trump administration. Apple made a similar announcement about its U.S. spending plans in 2018 during the first Trump administration. Trump, in a Truth Social post, thanked Apple and Cook, saying the move reflected the company's faith in his administration. Shares of Apple were up fractionally in late morning trading.
And coffee chain Starbucks has announced that it would eliminate as many as 1,100 corporate jobs as the new CEO, Brian Nicole, pushes forward with efforts to streamline the coffee giant and turn its business around. Nicole took over last year when the company's stock had fallen as much as 40% from its 2021 high. Since then, shares have rebounded more than 22%. His turnaround strategy focuses on job cuts and improving customer experience at US stores as the company battles declining sales. Take a look. And shifting focus to China now, Alibaba is making a big bet on AI and cloud computing. The Chinese tech giant announced that it will invest at least about $52.4 billion over the next 3 years to expand its AI and cloud infrastructure in China. More details in this report.
Alibaba plans to spend big on artificial intelligence. The Chinese e-commerce giant said Monday it aims to invest at least $52.44 billion into cloud computing and AI infrastructure over the next 3 years. Alibaba said the total investment amount is more than its spending in AI and cloud computing over the past decade. The company has kicked off 2025 as a winner in China's AI race. It's drawn investors with strategic business deals and its stock has risen more than 68% this year. Other Chinese firms have also been investing into the AI sector. Sources have told Reuters TikTok owner ByteDance plans more than $20 billion in capital expenditure for this year. They added much of the spending will be centered on AI.
And before I go, there has been a sharp recovery in Indian markets this morning. Let's bring up the mood on the markets about 40 minutes into the stock markets in India opening. The Sensex is up about 0.4% from yesterday's lows. It's up about 230 points or so from yesterday. The broader Nifty 50 is also up about 0.3% in trade, about 35-40 minutes into the markets opening. The mid cap is seeing some recovery again, up about 0.5 percentage point, but the real recovery coming in from the Nifty small cap 100, which is up about 0.7%. So good news coming in, at least on the recovery part on the Indian markets. We'll leave it at that. Thank you so much for watching Morning Brief at 9. This is Karthik Malhotra signing off, but news continues right here on News 9.
मैं और आप, हम अलग कहाँ हैं?
Gill on 199.
अपनी अपनी मंजिल पर हम दोनों की नजर है और उसके लिए हम जी जान लगाकर मेहनत करते हैं। पर कभी कभी
He's out on 199.
मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटा